I'm here with Gene Munster, founding partner of Loup Ventures, a venture capital fund. We all know Gene from the 20 years you spent at Piper Jaffary as one of the star Apple analysts in the world. To get started, I'd like to talk to you a little bit about Google, who just reported earnings this week. What did you think about that?
Everything was great, especially the revenue growth. Plus 21% was consistent over the past 5 years. And so I think there's always been this narrative that Google revenue growth was going to slow, and it just hasn't happened. It almost performs more like a SaaS story than it does like a search company. And the big nick on it was the cost per click. Essentially, they're making less money per click, which kind of scared investors, and so that's why I traded off. So I think if you look at this holistically, there's a lot of good things going on, not to mention all the other stuff that they're doing around frontier tech, specifically around AI, that is, I think, going to be exciting for investors over the long haul.
Do you think that the stock market overreacted on the negative side to the earnings, or do you think that investors are being too short-term thinking and that long-term things look a lot better?
Definitely too short-term thinking, and I think if you put this into perspective, Google really is the oxygen of the internet. We've known that for a long time. But what they're doing around AI, their CEO has said for the last 3 calls, opening remarks have been that AI is their North Star. And that is going to fundamentally change every company, but Google has a more unique play around AI. And so what that means for consumers longer term and investors is that users of Google will get the better results with fewer blue links, and advertisers are going to be able to advertise on Google and pay less and get a better ROI. And so I think that when you think about that, those pieces and what they're doing, the stock reaction this week was an overreaction.